Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we look back on last week, we saw the markets finish on a monthly basis, a weekly, and a daily basis right near the highs. The high for the month of July was 3279.99, and we finished at 3271 and change. Markets all went out, everything looked wonderful, but most of the action on Friday happened in the last 2 hours of trading. This was definitely short covering. I do not believe it was new buying ahead of the weekend. There would be no reason for that, but it was definitely short covering coming in with a strong bid, especially in that last 30 minutes. But last week we had the Fed, we had GDP, we had a lot of information come out, not to mention plenty of earnings reports that were released. We absorbed all that. For most of the week, it was very lackluster, choppy trading. There was no real momentum in this market last week. From an economic viewpoint, we have plenty coming out. We have the factory orders, we have manufacturing, we have ADP on Wednesday that's expected to show 1.88 million new jobs. We've got unemployment claims to come out on Thursday, expected to show another 1.4 million claims. That continuing number last week was right at 17 million. And then, of course, we have unemployment coming out on Friday, expected to show a downtick slightly to 10.5% and 2 million jobs to be reclaimed. The other thing that will happen this week is a huge number of earnings reports. We have over 1,300 earnings reports coming out. Now, all of these reports and everything that I'm talking about here is still looking back to Q2. The second quarter metrics all came in better than expected, and many of you may not think that fundamentals matter because of the Fed, but they do. This is the main thing that affects market sentiment on a day-to-day basis. All of the reports that we have coming out right now are definitely going to keep market participants on their toes as we try to digest this enormous amount of information. And one of the things that I'm continuing to watch is the US dollar. It's actually caught a little bit of a bid overnight. Gold actually spiked out and is moving back down. I'll be covering these elements in the technical section, along with going through our database, which is starting to see a fair amount of selling. So as I mentioned in Friday's video, my expectation is for the markets to go into this sideways choppy zone. It's possible that there's enough momentum to carry us above 3280 and still print some moderate highs early in the month of August. We're going to get a very good feel with all this information we have to digest. Let's take a look at the charts and see how this week is setting up. As we begin tonight's technical section, we'll go through the WaveTech database, and we continue to see a rotation going on with the sectors. You'll notice that financials, healthcare, services, and technologies are all quite overdone, as they are showing that they've exceeded their normal holding period. That's where the rotation is likely to begin. These newer sectors, such as basic materials, capital goods, you'll see they're 8 days of 33. They're early in the short-term cycle. What happened on Friday's run, we saw a lot of selling coming in on the models daily, 1.2 and 3.2. There were 696 symbols on the exits. There were 936. It was closer to about 1,600 symbols liquidating for Monday's open. I've been discussing this for the last several days, that we're now moved the database down to a 79.57% bullish. Now, we'd gotten up to 88%. We've seen 10% come off. I continue to expect to see a liquidation of the short-term trades that we've had on as we come into August and begin to see the rotation that I've been discussing over the last 2 weeks. As I mentioned, the rotation is likely to be in the financial, healthcare, services, and technology areas. Those have been the stronger areas of the markets. Most of them have decent returns, especially in services and technology have been the big movers in out of those sectors. So expect to see quite a bit of rotation happen as we unfold over the next several weeks. On the intermediate, we saw a 260 buy signals versus 170 sells. So mostly a rotation, a slight positive in the 1.2 model, but nothing changed where we're at 65.61% bullish on the intermediate database. And this is a very robust number. These trades that come on in the intermediate hold approximately about 206 trading days, the better part of a year, as we look forward for that next 6 to 12 months. I'll continue to cover this as it unfolds, but my scenario that I've been painting for you is that the short-term database is going to roll over probably down to at least 50%, maybe 40% bullish. Meanwhile, we'll see just a rotation occur in the weekly database. And then finally, after about 6 to 8 weeks, we'll start to see a recycling of the short-term database. Then there will be some positive rotation back into short-term models, pushing everything back up. We should remain in this sideways pattern for at least 4 to 6 weeks. We're just going to talk about the market grid and the patterns on the weekly chart to start with the S&P futures. We did see a print just slightly under 32 down to 31.92 last week on the futures. I think we'll stay within the range. We could see an inside bar this week, but because of all the news we have coming up, it's possible that volatility will kick up. But for right now, it's too early to tell, especially with the overnight session so far. It's been like watching paint dry. This thing has just been in a total sideways range, up about 3.5, 4, down 3.5. It's just been grinding out and not trading in a lot of contracts, about 101,000. We're about an hour away from the London Open right now. But these patterns are setting up. You'll also notice that the market grid has squared off, and I've been talking to you a lot about that. When we see that, the market will remain in. Now, there's a slight uptick this week. You notice that it points up and suggests that we're going to see the possibilities. If we get above the R1 number, the next numbers are into the 3,300 level. 3312, 3337 is R2, R3 for the week. These numbers are possible, and this is what I was discussing in the opening comments, that there could be enough momentum to carry the market through that 3280 resistance number. But these numbers are showing up again. On a daily basis today, 3278 is a similar number to the weekly R1 number. So we're going to see some resistance continue at this 3280 level. There's only a couple days, in my opinion, that if we don't get above 3280, then we're going to see more downside, possibly going down and testing the lows of last week around that 3192 level. Going to the daily cash market, once again, just going with this potential for a follow through to the upside. There is a minimum target. There's 3 dots up above the markets here. Those are Fibonacci projections suggesting that the market could move toward 3364. This number also maps out, as I will show you, on a weekly basis. On the market grid on a weekly basis, the RXT is 3357. So it's very possible if we can get above that 3280 number. We've got R1 on a weekly. This is cash now, not futures. R1 on a weekly at 3291. R2 is 3314. So very easily we could be challenging the 3300 level. The one thing that I have been noticing is that we're not getting a lot of expansion in the PPMs. You can see on a weekly they flatten out. I'm going to go back to the daily futures here so we can get a feel for the overnight action. You'll see that PPM 1, 2, and 3 are actually continuing to lose momentum. Looking at the action that I was talking about in the database, seeing a lot of liquidations come in to the short-term model. If we can't get above 3280 in the next 2 sessions, then we are likely to see the 3200 level challenged and the possibilities of going just below down to 3184. There's still a lot of struggles. So we're very much at a pivotal point on the charts right now where 3280, we break above that, then we'll see these 3314, 3330 numbers. And then on the downside, if we can't get above 3280 in the next couple sessions, then we're going to see some backfilling in here and just a sideways choppy range. when we get into market environments like this, it's more difficult to predict the day-to-day movements, but the trends are still moderately up. On a short-term basis, they're fading quickly. On an intermediate basis, we continue to have robust numbers with a 0.74 on ppm1, ppm2 is 0.96, and then ppm3 is 0.18. ppm2, I've been talking about going back into April and May, is really starting to accelerate, telling us that the underlying trend is going to stay intact. Now we're looking at weekly, we're looking at intermediate, and this goes in line with what I'm talking about on the intermediate database. As I mentioned, we're 65% long, and those trades are likely to stay on for as much as 200 to 240 days on average. And typically, there's anywhere from a 20 to about 35% gain in those stocks during that period of time. So there's a substantial pattern setting up here. There's no big downside going to happen here. There's some moderate upside. We could see a trigger that would get us up above 3,300. The extremes that I discussed on the weekly chart between 33.35 and 33.60. But for now, the big number, and I've been talking about this, I believe this is the third week now, is 32.80. That's your key pivot number. If we don't get above that, then we're going to continue to struggle at these levels. Looking at the overnight action in the NASDAQ futures, we're seeing them up 0.34, but very similar action in the NASDAQ futures. We're seeing momentum starting to tail off. We're actually turning negative on ppm1. ppm2 is still positive, and the ppm stand for price pressure momentum. This tells us about the angle of attack of the trend. It suggests that there's major support at 10,692. The low so far tonight, 10,876, high 10,955. If we look at the grid for today, the upper end of the range, R1 is 10,956. We've had a 10,955. So we've touched R1 on the downside, 10,825. We're just short of hitting the S1 at 10,825. So it's probably going to be an S1 R2 day. The same thing with the S&P. S1 R2 is this configuration is the most probable for today's action. Looking at the weekly market grid, we have R1 is 11,047. We did hit 11,058. R1 is right at the all-time high level. If we break above that, then you can see then the next levels are R2, R3, which is 11,223 to 11,398. The same configuration is unfolding on the PPMs on the weekly NASDAQ as we have on the S&P, with a slight more bullish tone on PPM3. But PPM1 is 1.35, 1.57. These are very robust trends. This market is not going to roll over here, but I do expect to see it chop around in the range, and we're likely to see some weakness as we go through this week. And the key number on the NASDAQ will be that 11,047. We'll get above that, then we'll see some higher numbers, and then probably S1, R2 on a weekly basis. Next market is the US dollar. We've traded just below the 200-week moving average that I've been talking about. I'm starting to see some turnaround possibilities in the dollar. A lot of people are talking this thing down. The sentiment is so negative on the dollar. It's certainly due for a bounce. It's pretty oversold down here. But what you're seeing here is PPM1 is starting to turn up, but it's still very negative. And the resistance right now is at 9,600. We're at 93.46. We're nowhere close to that. The 200-week moving average, 93.84. We're likely to see it move back above that level. The resistance above that number will be the 94.13 to the 94.56 level, which is an R1, R2 on the market grid for the weekly. Even though PPM1 is turning up, there's still acceleration on PPM2, which is going to keep the overall market sentiment in check. So it will be negative, but we're likely to see a rebound in this market. The final market is gold. So far in the evening session, we've seen 2009.5. R2 on a weekly is 2020. S1 1969. If we can't get above 2020 early this week, we're likely to see a move back toward the 1969 level. The expectation then would be an S1 R2 week in gold. The daily chart confirms this pattern. We do have some robust numbers underneath the market. 10-day moving average is at 1944. That's going to be substantial support at that level, but I just mentioned on the weekly, 1969 and then 1944 is going to be substantial support. Above the market, R3 was 2014. I mentioned we had a high 2009.50. Momentum is starting to roll, but it's still very robust. There's probably at least 3 or 4 sessions of further consolidation. We've seen this pattern that's unfolding over the last couple of days. We got a slight bias to the upside. It's flattened out the momentum substantially. This will complete the video for tonight. Thank you so much for watching. We'll talk to you tomorrow night.